44. When investing, some people manage their own portfolios while others work with a financial advisor. In fact, each path comes with its own set of advantages and disadvantages. So this is a big conversation. We're going to simplify it. Financial advisor Christian Clausen from Burns Financial is here to break it down for us. We were talking in the commercial break, Christian, how this is really a generational question now, because what are you seeing with the 20-somethings versus the 40-somethings?
Well, I think the younger generation really like to do it themselves, but they don't understand the pitfalls, all the things you have to consider, and when it comes to paying attention to the taxes while you're trading,
Right.
depending on which account you're trading in, you may create a lot of taxes by, doing a little bit of day trading.
So most people enter the stock market through their employer, for example,
Yes.
right? Talk about what that transition looks like when someone learns the stock market based on what their 401k plan is doing, and how do you get them to be conscious of how much power they have in their decision making?
Well, coming down to taxes again, you want to make sure that you pay the taxes up front. Most of the 401ks have options through, doing after tax and doing Roth contribution.
Right.
We feel like we want to save on taxes, and when we do that pre-tax contribution through the 401k, we save a little bit of taxes now. But what people don't realize that if they do the after tax, the Roth portion, they pay the taxes now, and that's going to grow tax-free for the rest of their lives, even when they take it out later. And that, compounding, is going to make a huge difference.
And so you're seeing that now with the 401k generation cashing out, it's getting taxed highly. What is the rate on your gains from your 401k?
So inside the 401k, fortunately, we don't have any capital gains. But it's like when you invest outside, then you have to make sure that if you're doing day trading and those type of things,
right,
you can create ordinary tax gains instead of long-term capital gains. And there's two different tax rates. So we want to make sure we're careful with how we trade.
Okay, so do you recommend a financial advisor, or do you recommend doing it yourself? And is there a right or wrong answer depending on which stage of life you're in?
Really, there's not right or wrong. I think you have to look into yourself and figure out, do you have the temperament for the investment? We saw what happened in March. Market went down 10, 15% very, very quickly. Are you going to be the one that panics and sell at that point? Or will you understand that over time, it's actually going to make money and it's an opportunity? So I think everybody has to be wary of what's happening. Are they emotionally stable to be able to invest? But they also have to consider all the other factors that goes into investing. And that's why it's good to have an advisor to kind of cover those blind spots, because there's a lot of them.
And what are the blind spots as we finish up this interview that you would say are the ones where a financial advisor is the most helpful?
Well, think about it, the bigger picture. Think about in the long run. Don't make emotional decision quickly. Think about how it's going to impact you in the future. And what type of account? Can we pay taxes up front so we can save on that later and grow tax-free? And don't make emotional decision. And I would also say when it comes to legacy planning, trust, estate, those type of things,
give it to an expert.
Give it to the expert, give it to an attorney.
All right, thank you. Christian Clausen from Burns Financial, really appreciate your time.
You're welcome.
All right.